I wasted hundreds of hours trying to perfect the lower time frame just to end up losing more and more trades and getting more confused. So I stepped away from the lower time frame and started trading 15 minute, 30 minutes and 1 hour. Fast forward 5 years down the line, I have perfected my 5-minute entries and have multiple ways to enter using a 5-minute with high accuracy. That can be seen in my trading journal that I do on live on a daily basis. So in this video, I'm going to explain my exact 5-minute entry strategy that I use, and one of them with really high accuracy. As you can see on my journals, it's one of my highest accuracy trades, and I'm going to break down step by step exactly how I use it and why, and hopefully this can help you kill the 5-minute time frame and not be confused from it. So if it sounds interesting, stick through and watch the full video, and let's get into it. All right, so we're going to get straight into this 5-minute strategy here. Now, the biggest mistake that most people make actually with trading the lower time frame is they forget about that higher time frame. So right now I'm on a 4-hour time frame, and actually we're going to start from a daily time frame here. So we need to grab some information from the higher time frame before moving on to the lower time frame. And this is what really made me fail in the beginning, is I just focused fully on lower time frame, trying to understand the lower time frame fully, as that's where I thought all my answers would lay. But simply your mindset changes that the lower time frame you're just going to use for entry, but everything else comes from higher time frame. So we start off on daily time frame here, and what we're trying to understand is where is our zones of interest. So I like to mark support and resistance. I have plenty of videos of this, how to mark support and resistance, and I do it in most of my videos because that is the base of my strategy. So we will go through it now for new people watching, and the old people who have watched this, it's good to refresh. It will take 2-3 minutes. So I start off daily. I want to see where's my support and resistance. This candle is still open here, so I can't mark that. And basically what you're looking for is a support is when a bearish candle followed by a bullish candle closes, that's a support. And when a bullish candle followed by a bearish candle, that's a resistance. So you literally mark the most recent. You look left, most recent support, mark it, most recent resistance, mark it. So on daily time frame, our most recent support is all the way down here, so we have some room. Our most recent resistance is here. Now I take the bottom because that's what comes first, right? And I put this as DR. DR stands for daily resistance. Now I do the same thing on the 4-hour time frame. Now 4-hour time frame, we start to have some mess. So our most recent support, remember, bearish followed by bullish. We look left, and the most recent that happened was this one here. So I mark this as my 4-hour support, 4S. Okay, I look for my resistance. This candle just closed, I think, right now. Actually, no, it's not closed. The charts are closed now, but this candle would still be open. It's bank holiday today. So this candle would still be open right now, and this would not be a resistance yet. The resistance would actually be higher above this, right? And we're keeping it simple. This would be your 4-hour resistance. Now I want you to do this all the way down till you reach the 15-minute time frame. So next time frame is going to be the 1 hour. You do the same thing on the 1 hour here. So we look at 1 hour. Where's our next support? Down here, right? That's our next one. From where current price is, right? Don't worry about this. This is above price. So our next support is here. So we're going to mark that as support, 1S. And then our 1 hour resistance is actually going to be this one right here, right? Technically, we would mark this because this is what comes first, okay? So you're literally looking whatever comes first, right? I know it's behind, but you would mark this, right? And this is your 1 hour resistance. Now you need to practice these markups. I'm flying through it. I have separate videos on that, but I really want to give you the strategy in all one video. So big common mistake is people mess up their markup. So I don't mind you guys spending a bit of time perfecting markup, but watch the whole video to the end so you grasp the whole strategy. Maybe you're already good at markup, so it's easy, okay? The next time is 30-minute time frame. Now this is pretty simple as well. One line here, one line here. Now we're getting a lot of lines because this is such a crap range. I mean, it's one of the worst places I can basically choose an example, but it's getting good practice, right? Good practice to draw lines. And essentially the key thing here is once you get advanced, you don't draw lines where you're not going to trade. So I know for a fact I'm not going to trade here and I'm not going to trade here. So those 2 lines I'm going to remove. But as a rule of thumb, mark everything. Mark everything until you get good at it. And our next 15 is going to be all the way up here. Okay, this is our 50-minute resistance. We will in the end of the video, not end, but the second part of the video, get into a real life example. Ideally, your next 15-minute resistance is really here, right? You look left, where's your next resistance? It's here. You don't need to mark this one because it's the same as the 1 hour. And then above that is this one and then this one. But I'm not trading this, and you're going to find out why, so keep on listening. So you finish your markup, right? Try keep it. Here's a good rule of thumb. Here we have about 6 lines. Try keep it 5 to 6 lines. If you're marking more than 5 to 6 lines, that means you're marking too much, right? You are marking too much, okay? So the next thing we're going to look for is we're going to look for another thing from the higher time frame. I know you guys want to get onto the 5-minute, but just wait. what we're going to look for is we're going to look at how did previous daily candle close and how did previous 4-hour candle close. They should be closing in the same direction. So if I'm going to take this setup for buys, okay, I need a daily candle closing bullish and the previous 4-hour candle closing bullish when I'm trading in a session. So you have to take these trades in a session, not random times. You take them either London, close to London open around that time, or after New York open, during New York open, or NYSE, and then a little bit after NYSE. Those are your main times. Asian as well works, but most people are trading London and NY, but Asian of course works as well. So you want to be in that volume time. Now, before that volume time, when you click the 4-hour, you will be able to see the previous candle that was closed. That will give you the information. So I need, and this is something called bias. This makes life very easy. The next step is I need to find where do I take this trade, okay? So when it comes to actually placing the trades, we need to have the correct zones, and those zones are going to look like this. They're basically clean candles. Doesn't have to be something like this where it's pushed up and pushed down. That is a clean candle zone there. You can see there's no resistances. This is another beautiful example here of just straight clean candles. This one as well here, clean candles. And the reason we want to trade in clean candles areas is because there's no resistance or supports there. It gives us a clear path. It basically giving us the route of least resistance. So that is extremely important when looking for these trades. So that's gonna dictate where we take these trades, is basically where there's clean candles. So it wouldn't be valid to take it right at this line here because there's a resistance. It wouldn't be valid to take it here. And maybe the reason why I showed you the higher time frame in the beginning is right in between here, or maybe right here like this, there's actually something like a daily resistance, right? DR. And then this will invalidate because you might want to take a buy in this clean candle zone. You fail because you're trading straight into that daily resistance. That's why we do the higher time frame work. So make sure you identify the zone. Now we're going to talk about how to actually enter. So once we find the zone, we know what direction to look for based on, remember, the daily and the 4-hour candle. And now we have the clean candle. We need to look at the strategy and how we're going to use 15. So what we need is we need to have a clean zone and we need some sort of structure to form. Now I'm going to show you a diagram that I have here. So this is a diagram that I have, and you can access this in the link in the description. You'll see free resources. It's basically a link to my WOP. It's separate to my exclusive group. This is not paid. This is free. You guys can just access it. All you have to do is enter an email to get an access to WOP, and then you get this plus a free risk management course. A lot of good stuff for you there, but that's why I made this. This is what we want to see. We want to see structure formed and a candle close above. And I want a candle to close above a resistance. So in this scenario, we're looking for buys. I want a candle to close above resistance either on a 30-minute, a 15-minute, or a 1-hour time frame. Well, 1 hour, 30, 15. Any one of those time frames is valid, okay? Once we get that close above, that's where you're going to scale down to the 5-minute time frame, and I'm going to draw what I want to see on a 5-minute time frame. So I've just made this drawing here. This is exactly what it will look like maybe on a 15, a 30-minute, or the 1 hour. I prefer the 15, close above the resistance. So you made a resistance, remember, looking for buys. To the left here has to be clean candles, but sometimes you get this push and the 5-minute looks like this. Now, what is going to be the entry strategy to actually give you that high accuracy entries? So what I want to look for here is I want to see candle close above on a 15 or a 30 or a 1 hour, like I said. That's your confirmation. And then to get that 5-minute entry, you scale down to the 5-minute. You look for one 5-minute candle closing bearish, right? And this is how it has to look. Now, it can be bullish if you're looking for sells, but you want to have a longer bottom wick and a shorter top wick. Very important, very important. You can't have it with a long top wick like this. This is wrong. This is going to be wrong. If it looks like this, you can't take the entry. What you're going to do is once this candle closes, you're going to look for the next candle to make a bottom wick. As it flips and breaks the high, which is going to be a different color now, that's your entry trigger right there. Boom. Once it breaks these highs, you're entering there, and this gives huge accuracy into the trade, okay? Now, you could now stop loss you want to put below the 15. Let's say it's a big 1 hour candle close, you can get away with stop loss below the 5. Okay, so it depends on how big if it's a tiny pullback, best to keep stop loss always below 15, much safer. But if it's been quite a big move and this is a solid move and like it doesn't make sense to put stop loss here, it's like, you know, a huge stop loss, you can tighten up the stop loss and put it below that 5-minute candle pullback. Does work, okay? So it all depends on the size of how much it closed above, you know, and how big your range is. Because maybe here you have a 30 pip range, but stop loss here is 80 pips. Won't make sense, right? 80 pips for 30, but that 5-minute stop here is going to be like 25. It's like, oh, okay, that makes sense, but it's not too small at the same time. So very important. Want the candle to close bearish, and then you take it break of high. Now with that fresh in your mind, we're going to jump straight into an example here. I'm going to show you exactly how to execute on this. Now the reason why this setup is actually called a thunderstorm setup, this was done by one of my members in the exclusive groups when we were just trading. We trade live every single day, London session, and you know, we trade in the group New York, and we were in a London session on Zoom together and trading live, and we took this setup, and outside was a thunder, and someone called it the thunderstorm setup. So that's how it came about, if you guys are wondering why it was named that, right? So yeah, if we're looking at price right here, I'm going to use this backtesting simulator. Even though it's a backtesting, it's good to replay because we can view the markets moving as if they were really moving. On TradingView, you can only skip candles. Other softwares, you can only skip, but I want to show you how it is in real life. So bearish bias, right? Price is going down. From here to here is all clean area to trade. I'm going to rush through this a bit. I've already done the markup for you guys, mark my support and resistance. So what do we need? We have the range. We need something closing below. Today we're looking for sells. I want to show you an example as well. So let's skip by 5-minute candles here till we get the close below. So we're on a 15-minute time frame right now, and the time this candle here, boom, is the 15-minute candle close. We're gonna drop down to the 5-minute time frame, right? So we wait for the 15 close, boom, that's your 15 close there. Now we have these 5-minute candles closing straight. So what do I want to see? I want to see that bullish small 5-minute candle, right? That is going to be my 5-minute entry there. So what do I wait for here? I wait for a small 5-minute bullish candle. We don't have it yet, so I'm not entering yet. And there we go. We formed that 5-minute bullish candle here. So this is what's going to allow me to take the trade here. So all I'm going to do is I'm going to place a sell position, right? And I want to place it break of lows, right? Sell position here. Break of lows, stop loss back above in the range here. We can put it above the 15-minute candle like so, and that 5-minute, basically what we're speaking about. And then your target gonna be whatever your next support is to fill the range. Okay, entry break of low, and we're just gonna confirm the order like that. In this scenario, I'm risking 1%, and instead of skipping candles, we're gonna play the candles like if they were real life here. So makes a top wick here, which is pretty nice. And then you just wait for it to break the lows. So this is teaching you how price actually moves. So almost broke it, and boom, we actually got triggered there. So now you're in the position, right? You're in the position, and this is how it is in real life right now. So you're literally watching, and this is the difference between skipping. Skipping is easy. You can't really feel. That's a great push already. And yeah, basically that's exactly what you want to see with this setup. Straight push. We're running around $700 P&L right now. Can actually see that in this trade feed down here, and yeah, now we just look to see if we can hit max TP here, cover for spreads as well when we speed this up a bit just to save time on this video. So this is the powerful thing about this simulator, is you can control it like this and actually practice real life trading. Amazing tool, and yeah, really good one to use. So yeah, let's just see how it's forming structure right now. You don't need to be alarmed when this is happening. You have this level here to protect you. This actually becomes a resistance. Now we're creating a lower high, makes it even better. Just spiked down there, missed our TP by like 1 pip, but hopefully this can break the low and then end up hitting TP here. Would be great. So let's see if it breaks the low. There we go, TP smash. So nice little trade hit there, 1.5k on the account there. So smooth trade, a 1 to 5 in that scenario there, had all the confirmations, made a beautiful lower high, and then TP hit. Yeah, a little bit more, but this is how you don't really want to be greedy in these type of scenarios. So if you hopefully that makes sense, and if you want to try this software out, it's in the description. It's called Pip Labs. It's my favorite software here and one we created, so make sure to try it out. There's a demo version for free that you can go and enjoy and get back testing. It's really something that's going to take you next level. Go and find these entries. This is your challenge. Go find these entries on the pair you trade, test them out, see the results before taking them in live market. You have to do this homework. It is extremely important. So hopefully all of this has helped. Hopefully you guys enjoyed this video. If you have, leave a subscribe, leave a like, do all of the YouTube business, get this video up to 500 likes. I would appreciate that. And yeah, with that being said, take care, trade sharp, and hopefully catch you guys very, very soon.